Yes. Look, I think for me, the starting point today has to be that we're living in a world in which pretty much every major central bank is cutting interest rates: the Fed, the ECB, the PBOC, um, and most countries are also following very stimulative fiscal policies. China today is running a budget deficit of 10% of GDP. It's never done that in its history. The U.S., just did the big beautiful bill. Europe, you have France pretending to perhaps think of starting to have a discussion on maybe whether they should do fiscal consolidation, and a little bit the same thing in the UK. But everybody else in Europe is sort of pedal to the metal. In Japan, we're basically finding out who the next prime minister will be, and the, the choice is between more fiscal policy easing or even more fiscal policy easing. So essentially, everywhere you care to look, it's kind of pedal to the metal in terms of policy, and unsurprisingly, where the markets, like it. While last year, if you weren't in US tech, you kind of struggled. This year, there's been lots and lots of places to make money. Pretty much every major equity market is up double digit. And within the markets, financials are doing great, miners are doing great, energy stocks are starting to do well. And so uh, there's a very strong reflationary vibe out there. And there's reasons why this may stop, but for now, I think we have to assume, given the policy settings, given the messages from the market, that we are in an inflationary boom, and that's how you have to position your portfolio.
Yeah, but I guess in all this liquidity coming into markets, you said fiscally, monetarily, it just seems like a perfect, place for economic growth. And as you're saying, linking to inflation.
Yeah, look, it's I think it's pedal to the metal. There's here's a fun fact for you. A year ago, the U.S. current account deficit was 3.6% of GDP. Today, the U.S. current account deficit is 6% of GDP. So that's 2.4% deterioration. That's never happened before. As the U.S. government keeps spending more money than it takes in, 6-7% budget deficits in the U.S. As the U.S. consumer feels very wealthy with asset prices going up, you end up in a situation where the U.S. is now sending more dollars to the rest of the world than it ever has before. I mean, this year the U.S. will probably send about $2 trillion to the rest of the world, and the rest of the world is getting these dollars. And I think until recently, the view was, on the back of the Mexican crisis, the Asian crisis, the 2008 crisis, if you were Indonesia, Thailand, India, China, and you earn dollars, you thought, oh, I better keep hold of these dollars because, I may need them tomorrow to fund my trade. And American banks are fickle. In a crisis, they move away from me. And so I better build big US dollar reserves. And then all of a sudden, Russia invades Ukraine, and we find out that we ban Russia from using dollars and euros and Swiss francs and sterling, and we wait for Russia to collapse, for the Russian economy to collapse, and then it doesn't. Uh, Over the next following 3 years, what you see is that Russian trade with China goes up 3x, and Russian trade with South Africa, with Brazil, with India goes up 2x to 3x. So all of a sudden, people realize, oh, you know what? Maybe I don't need quite as many dollars to trade as I thought I did before. So the U.S. sends more dollars abroad than it ever has to a world that starts to question, what do I do with these excess dollars? Now, so far, what they've mostly done, what foreigners have mostly done, is take these dollars and recycle them into U.S. equities. So you've had a roaring bull market in the U.S., but what's pretty obvious is that this year, all of a sudden, there's a feeling, okay, maybe I don't need quite as many dollars. I start to sell these dollars. Dollar starts to go down structurally, and other asset prices do very, very well. And I think this is where we are right now. Um, and unless you think, for whatever reason, the U.S. current account deficit is about to move back from 2 trillion a year back down to 1 trillion, I think that trend is pretty well set, and will continue to add liquidity into the world that we live in.